You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. Did you miss us? It is noon Central. It is 1 p.m. Eastern. It's time to talk some vol once again. Yes, it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks are mainlining. Hope you're having a good start to your final trading month of the year, man. 2025 flying by in some regards, and in other regards, it seems like a lifetime since Tariff Day and Liberation Day and all that fun out there. Of course, reminder at the top of the show, if you're not listening to the full network, wherever you're getting your favorite podcast, make sure you're doing so. Thanks to all of you who've been sending your year-end screenshots of your podcast rankings and whatever platform you use in Spotify, Apple Podcasts, and showing us up there at the top. We appreciate the love out there. Thanks. We literally couldn't do it without all of you folks. So thanks to everyone. Hope you're having a good final trading month of the year. Remember, of course, if you want to join us for the official after party of Volatility Views, you want to win awesome prizes like Quip did this week and all sorts of other fun, including there is the rumor that there is an upcoming Vol Deathmatch 2.0. I think you want to check that out. 1.0. Pretty big hit. theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on this fun post-Thanksgiving Friday to talk a little vol. First, we're going out to the man who has not one, not two, but three houses, though he is in the process of getting rid of one of them, I do believe. None other than the once future and present Dr. VIX, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. Didn't you hear that, moving day is supposed to be everyone's least favorite day? You're not supposed to do it once, let alone twice at the same time.
Well, we're getting it all done the day before the semester starts back at IU. So that's my Christmas holiday. So we're empty nesters now. We swapped houses with the people across the street because they've got a ton of kids and we got none. And then we took those proceeds and bought a lake house down in Indiana as well. So I told my wife we did a 2-for-1 asset swap at a credit, which she did not understand at all.
Second person I know to pick up a lake house down in Indiana. Apparently that's all the rage. That's
a big thing.
Lake houses in Indiana, all the rage. And another guy who hasn't moved since he picked up and fled to Austin during the height of COVID, unless he's moved since around Austin. I don't know. Let's find out. He is the greasiest of meatballs, Mr. Mark Sebastian from optionpit.com. Mr. Meatball, welcome back to the show. Have you done any moving since the last I checked with you, sir?
I was in Chicago Wednesday and just flew back last night. But other than that, nothing interesting.
You are coming through like a hurricane, sir. You sound like you are 10,000 decibels. Wow.
Yeah, here, let me turn down my gain a little bit.
Holy crap.
Is that better?
That's a little better.
Is that a little better?
Yeah, a little better, yeah.
All right.
I think
hey, Mark, did you hear about Did you hear about the rapper that was a professional trader?
I did not.
His name was Little Nas Dak.
Wow. Okay. Well, it's a lot going on there. Wow.
You know what you call it when he's got a wad of C notes?
No, I'm scared.
Nasdaq's 100.
Oh, these would be good jokes for the European market brief. We got to bring him on there for the quality international humor.
That. I think Mark Sebastian's got to replace me on the next one.
I know he might have to come in just for the quality humor. They always say Germans appreciate naught if not humor out there. Famous for their sense of humor.
Famous. Germans are famous for
everyone knows their
humor.
German stand-up comics goes back centuries. We all know this. All right. As we attempt to dial Mark back from the hurricane level that he's at, we'll keep on dialing right on into a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is. Of course, we were off last week for the Black Friday shopping / post-turkey malaise / football playoffs. All sorts of fun going on last Black Friday. But now we are back, listeners. And you know what? The markets are back in rally-ho mode. They've been pretty much green just about every session post-Turkey Day, and most of the sessions this week as well. We had a little bit of intraday dust-up a few times this week, but mostly green, and we're seeing green on the screen yet again today. S&P flirting with, Uncle Mike, wherever he is right now, can't say his trademark phrase, but flirting with new all-time highs, up about 1/3% again today. Dow up about 0.4%. NASDAQ up 1/3%, and VIX cash dipping below the 16 handle, listeners. Yeah, it was at about 15 3/4 when we kicked off the show. May have dipped even lower. There might be 15.65 now. So seeing levels we have not seen in a while. If you're saying, man, that sounds a lot lower than it was the last time we got together on the show, it's because you are right. You've been paying attention. You get the gold star. We were down exactly 8 points at 15 3/4 in the cash from where we were this time on the show 2 weeks ago. So last time on the show, we were checking in on the green room, see if we could bring in the old logins, and today he is a distant memory. 15 handle. No logins in sight, listeners. Our old pal Volley, Mr. Scott Nations, who rumor has it will be participating in Vol Deathmatch 2.0 at about a 1285 when we kicked off the show. That's down nearly 7 points, about 6.8 points from where it was this time last week. And VVIX, the vol of vol itself, getting annihilated, as you would expect, at a 92. That's down a whopping 31 points from where it was this time last week. So, yeah, spoiler alerts, they are coming for vol. I guess the market likes the fact that we actually have some data to sink our teeth into again after a few months of no data thanks to the shutdown, and the data not perhaps as hot, not perhaps as spicy as some folks were worried about. So all that feeding into the seemingly perpetual rate cut rally that we've all been living in for the past couple of years. But let's go around the horn. Let's go back to the land of the Southern volatility mecca. Mr. Meatball, sir, I will brace myself lest you knock me to the floor again with your overwhelming volume. What's catching your eye out there in the world of vol this week? And also, if you want to add any tail bits from last week when we weren't on, have at it, sir.
Well, the seminal change happened when, we flipped from interest rate cuts are not going to happen to interest rate cuts are going to happen, right? Going into Thanksgiving, they were pricing in about a 30% chance for a rate cut. Things had gone from a near certainty to unlikely. We have moved back to a near certainty, and we've seen markets rally with it. You can tell it's been interest rate related because looking at the Russell 2000 takeoff, that thing has been by far the strongest of the indexes. It actually did take out new all-time highs this week. So interest rate sensitive stuff is moving. The one area where, if you're saying I'm still concerned about that, remains crypto. Crypto looks terrible. Every time looks like it's trying to make a rally, they roll it right back over. And, I still see those treasuries as a real risk to the entire complex of crypto. And, if we do get kind of a market event, it would be something similar to what we saw around the FTX blow up. And you could see markets have a 2 or 3 day sell off around crypto. But I think the AI narrative right back on as soon as interest rates went up. Everyone just said, oh, that's right, rates are going down again, so we can get in on AI. Rates were kind of, the AI bubble story was more kind of a good excuse, since rates were not going down, to sell. And I think that's kind of what you saw around that. Now, the one area that it continues to be interesting in markets is NVIDIA. Can that Google NVIDIA news shook things up? Meta buying chips from Google, and is the first, I think, real risk to NVIDIA that we've seen. Right, that was a big order. You have other GPUs starting to come online from competitors. And, I continue to believe that, are we in an AI bubble? I don't know. Are we in a chip bubble? I think that's potentially 6 to 9 months away from the answer being yes. We could have a chip glut. We could absolutely have a chip glut as, data center build-outs start to slow down and more competitors come online. So that is, I do believe that SMH has been by far the strongest ETF in 2025. Kind of call it large cap ETFs. And, I do not believe 2026 is going to yield similar results at all.
It's funny you mentioned that, because you're right. Everyone was wringing their hands about chip valuations. Oh my God, is there an AI glut? Is there an AI bubble? Let's sell, let's sell, let's sell. And you're right. The second the narrative shifted on rate cuts, all of a sudden everyone's like, let's buy. Let's buy. And everyone's like, wait a minute. We've already priced in 75 rate cuts that haven't materialized. One more at this point is kind of questionable. And it doesn't change the underlying fundamentals. If you're concerned about an AI bubble, the rate cut shouldn't really factor into that too much. So it is kind of funny how you're right. The narrative shifted and all of a sudden, oh, rates are going to get cut. Let's buy. It's been a very interesting couple of weeks, to say the least. Mr. Rhoads, fair to say I'm skeptical. I've been skeptical of this market for a while. You've been hitting the bid with both hands for a while out here in this market, which is surprising. You still have enough capital left to afford 2 houses at this point.
Flat on the year.
But
after being so wrong,
sold,
I'm done for, and I'm also done for the year. I was like, you know what, fuck it, attack with it. I'm going to start over next year. But it just reached a point. A couple of times in my career, things have been so goofy. I'm like, let's step back and start over. But after very, very frustrating year, to say the least. And my biggest fear is we crash in December and I'm not there. So I do own some out of the money puts just in case. But otherwise, I had nothing going on. I want to, because the chip thing came up. I teach a lot of corporate finance and been incorporating some of the things depreciation-wise that the companies are doing that are buying these chips. And I don't think a lot of people are aware that this time last year, if a company bought chips, they would depreciate them over 3 years. They actually are starting to depreciate them over 6. You can't tell me that if somebody buys a chip for a data center today, that in 5 years it's still going to give them the performance that they want. So they're, in order to make it look like earnings are not getting hit by the buyers of chips like Microsoft and Meta, they are retooling their depreciation schedule, which is something I teach in corporate finance to keep an eye out for. So I like that I have a real world example around that. And then the other part of it is you did mention rates, and I don't think it's going to make too much of it's not going to be too much of a big deal. But to complete build outs, there are some tech companies that are going to have to borrow money, and they are going to have to go to the bond market or want to go to the bond market. So they probably would be happy with slightly lower rates. I would be hard pressed to buy bonds from one of the big tech companies if the proceeds are really just to spend on AI. I don't think it's ever going to pay for itself.
Well, some of what they're saying is that, the chips will not have the same viability, but they'll be doing, lower jobs. You're going to have kind of a waterfall of what servers are doing over time. 6 years seems excessive, but if you told me they were stretching from 3 years to 4 years or, something like that, or maybe 5, I find that a little bit more believable because, I understand that technology doubles and things get faster and faster, but I do think that you're going to see some of the limits of this start to tail off, and the runway may slow down a little bit until we potentially get quantum, which I think will, I'd love to hear what your tech people at Indiana are saying about quantum computing. I don't know if I believe it, that it's going to ever actually happen.
Said the Q word. Now we're going to go deeply off the radar. Don't you know quantum's going to break Bitcoin, Mark?
Yeah. Quantum's going to destroy Bitcoin,
buy
destroy
those puts
Ethereum.
now. Buy them all now.
It'll destroy two-factor authentication. All security goes out the window. That's what quantum's going to do.
All sorts of.
So sorry for going in that direction. As far as VIX goes, it's still doing its whack-a-mole thing, but trending lower.
There you go. The deep insight.
Okay. Back to topic.
The deep insight. You are a corporate finance professor. I expect such things from you. Hey, what's 25 basis points amongst friends? That's worth surely a 4 to 5% intraday pop in most mega cap names off 25 basis points. Why not? Let's keep rolling around the horn out to the land of the vol surface this week. And spoiler alert, it is much lower than it was this time on the show actually 2 weeks ago now. And looking at the D's future coming in to start the show, we had the cash close to 16, about 15.95. Obviously, it has dropped a little bit as we've been talking here. The D's future was hanging out right around a 17, almost 17 and a half, about 17.40 and change. That puts it down almost 4.5 points, about 4.4 points from where it was this time last week. The Jan future coming in to start the show was at about a 19.30. It puts it down about 3.3 points from where it was this time last week. And if we follow that logical progression all the way out, let's go to late summer of next. Let's go to August. So that means we're going out to the dog days of summer, which is kind of like December, usually a quiet period, but it's actually the peak of our chart right now, a little bit north of a 22 handle, 22.1 out there, which means if we go to the absolute apex of the graph, obviously the front portion of the term structure has collapsed. But the back end is down about exactly a point from where we were this time last week. We were at about a 23.1 2 weeks ago, and coming into the show today about 22.1. So interesting evolution, but again, most of that curve just coming down since our last show. Mr. Meatball, sir, anything catching your eye in the world of the VIX futures this week?
I mean, since our last show, for sure, right? We've seen the VIX totally roll back over. It's below 16, maybe heading to 15, and the curve has followed suit. We've gone from being in backwardation or partial backwardation or whatever you want to call it to the market entering a full contango and, pointing toward a little bit more, relaxedness. Now, I don't know if that lasts through Wednesday, but, traders are definitely pricing the market to move less, and they're pricing future movement going out 30 days to be significantly lower than it was the prior 30 days, which makes some sense because the prior 30 days were certainly more volatile on a relative scale. That being said, I think you're going to see near-dated options not priced well again. I think strangles and straddles for Fed Day are not going to be priced efficiently, and those are going to be easy to buy and make money on.
Mr. Rhoads, same question for you, sir. What's catching your eye in the land of vol futures this week?
The December contract is still a bit of a premium relative to what you would expect with VIX so low. What was it, about $1.50, $1.60 just a few minutes ago? 17, yeah. Just the December contract, it's a nice discount to January, but it's still pricing in a little bit of bracing. I assume it's going to continue to do that until we get past the Fed meeting next week, and then we shall see. But I guess since there hasn't been any dramatic, revelation from the catch-up that we've been doing in economic numbers, VIX itself is coming back down. I really am not 100% sure why the futures continue to be at that much of a premium. The trades that I saw were kind of split bullish bearish, but kind of 50-50 split bullish bearish when I went through the trades this week. But that premium still has me scratching my head. I said I wasn't trading anymore. I was damn close to buying some in the money puts that made money as long as we were below 1650 at expiration and for the December contract. I might do that early next week if we start to see things grind a bit higher in front of the Fed. So I'm having a hard time pulling the trigger on that one, but it's offering a pretty nice opportunity right now with spot at 15.5 and the December contract at 1735. It's just too bad expiration's not next week.
You have been eyeballing that D's contract for a little bit. Let us know if you end up pulling that trigger as we keep on rolling out to the land of VIX options. Is it a hot, is it a spicy, is it a banger day in VIX options? Well, the answer is actually, yeah, we're seeing a lot of action out there today. Go figure, you get a little bit of data and the market likes it and they devour it in the form of contracts as we're coming into this portion of the show. So not even halfway through the show. VIX threatening 900,000 contracts already, 878,000 contracts on the tape. So a spicy day out there in VIX land. The ADV is about a little over 1.01 million. That's up about 100,000 contracts from what it was 2 weeks ago. And again, just an absolutely impressive level of volume out there. And I've said it for a while now, when VIX is averaging 1 million contracts a day and sustaining it, you definitely want to pay attention. And speaking of paying attention, for those of you who've been waiting for a while for this top 10 VIX list to change at all, to break away from 8 to 2 calls over puts that it's been locked at for months now, well, then maybe this is the week you want to sit up and pay attention. All it takes is an enormous vol downside move to get people to wake up to, hey, maybe these puts actually are worth something out here, because right now in the top 10 in VIX land, we're seeing 6 puts outnumbering calls for the first time in quite some time. I'm going to say at least 5 to 6 months out here in VIX land. It's been a while since we've seen puts leading the dance out here, listeners. 6-4 puts over calls. Cost you 189,000 contracts to break into the top 10 in VIX right now. It gets you to a put, the D's 19 put to be precise. Number 9, lest you think people forgot this strike, 205,000 for number 9. Of the D's 15 puts, number 8, 213,000. Of the D's 25 calls, so there's a little bit of upside for you upside fans. Number 7, 219,000. Of the D's 16 puts, again, right back to our put strip. Number 6, 220,000 of the Jan 17 puts. So going a little bit longer term. If that's too far out for you, allow me to present number 5, 233,000 of the D17 puts. Number 4, back to the upside, 246,000 of the D's 30s. Number 3, 264,000 of the D's 35s. Number 2 are final puts in the top 10, all the way up at number 2. You can probably guess it if you've been listening to the show for a while or listening to the network for a while, because you know these have been hot almost every day for the last few weeks. It's the D's 18 puts. They were trading 65, 70, 75, 80, all the way up and beyond for every session. This was the hot option in VIX land. So no surprise that it's coming in at number 2, 279,000 contracts. What can usurp the ever popular D's 18 puts? Well, if you notice, what we've been lacking on this list today is some of the, shall we say, optimistic upside. Well, wait no further. Number 1, 324,000 of the D's 60 calls, 6-0s. So there you go. For all of you playing the far upside game, that is your Huckleberry for this week. As we keep on rolling, it's time to find out what's been tearing up the weekly tape. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
The song's so nice, we are legally obligated to play it twice. Mr. Rhoads, sir, what's catching your eye in the world of VIX Weekly Options while you're busy packing boxes?
I got so much credit for pack. I packed 20 boxes today.
Oh.
So on Monday with VIX at 1675, we had a buyer of about 10,000, and this was an opening trade. 10,000 of the December 3rd, 19 calls at 17 cents. That trade didn't work. Also on Monday with VIX at 1718, we had a buyer of about 2,000 of the December 10th, 20 calls at 75 cents. That was an opening trade. The next day, somebody bought 2,500 more on Tuesday, bought 2,500 more of the December 10th, 20 calls for 50 cents. And then also on Tuesday with VIX in the 16.5 to 17 range, we had a seller of 5,700, which was almost all of the open interest. December 3rd, 17 puts for 38 cents. Couldn't figure out where an entry might be on those, but if they chose to sell and they got 38 cents for them, if they had just left the position on and held it through settlement Wednesday morning, they would have only made 14 cents. So even if that was a loser, very good on the exit. Wednesday, the trades that showed up were Christmas Eve and New Year's Eve. So holiday trades. With VIX at 1686, we had somebody sell, I think a couple thousand of the, it was about 1,800 of the December 24th, 22 calls for 79 cents. They bought the 30 calls for 40 cents and took in a 39-cent credit. Somebody also did another bear call spread with VIX at 1599. Actually, this was a bullish one. Sorry. Somebody bought the December 24th, 20 calls for $1.06 and sold the 30 calls for 30 cents. And that cost them 76 cents. I had written that down as a credit on the notes. Sorry about that, guys. And then also on Wednesday with VIX at 1646, somebody bought 500, boy, this looks smart, 500 of the December 31st, 17 puts for 53 cents. Got a 1647 break even on that right now. They could probably, if VIX, I could easily see VIX on the last day of the year, 15 handle, So I think that's smart. That trade looks, barring anything happening. Then Thursday, I just love this. Somebody bought 500 more of the December 10th, 20 calls for 25 cents. They liked him at 75. They really liked him at 50 cents. They loved him at 25 cents. And the OI keeps building on that. Also yesterday with VIX at 1596, somebody bought 1,350 of the December 10th, 18 calls for 59 cents and sold the 22 calls for 19 cents. If they get a vol spike above 1840, they look somewhat smart on this one. Again, probably not looking very smart right now. And then today there was one trade. It's not in the notes, but where's my Excel spreadsheet? I did see one that I thought was worth talking about. Oh yeah, somebody bought 500 of the December 24th, 14.5 puts for 5 cents.
They said, you know what? They're listening to the show. They said, we know those 15 puts don't work. We're going to be half better. We're going to be the 14 half puts. We'll teach them. If the 15 puts never pay, we have to get paid on the 14 half puts. That's how that logic works, right?
It's got to work.
I'm trying to see the logic.
Quiet day, a very quiet week in the weeklies. Not pages and pages and pages of trades to go through.
Now, speaking of logic, I'm trying to see the logic of all this OI to the upside on the 10th, because that is, of course, Fed Day. You'd think if you're going to get
You'd go the other way.
Yeah, you'd go the other way. You'd fade it going into it, and then if you want the upside, you want the week after, because that's when the vol spike is going to happen after those options are already off the board. So, I mean, I don't see that unless something happens between now and Fed Day, obviously, but that would seem to be the next catalyst for some decent vol upside is some sort of surprise coming out of the Fed. Right now, it seems like you're just offering some money up to the market gods, but c'est la vie. We all see there is weekend risk out there. We all know that. So this could be a weekend risk play. If so, it is a pricey one, but c'est la vie. Sometimes, you got to feed the market gods, Mr. Rhoads. Yeah. And so we should all be thankful to these people that they made the offering for us today. All right, out to the land of VIX options. Who's making what offerings out there in VIX options? Because spoiler alert, we're trading out there today. Like I said, 878,000 contracts on the tape out there in VIX land today. You might be saying to yourself, what is the hot option in VIX land on a day when we've already got nearly 1 million contracts on the tape, closing in on 900,000 already? Well, I would say to you, good sir or madam, it is the D17 put. So not even the 18 put. We're already past that. That's old news now. It's the D17 puts, and you're getting those for the prices you used to get the 18 puts for a week and change ago. The 17 puts going up today for around 70 cents, 77,000 times. Worth noting, there is OI. If you listen to the vol top 10 breakdown, there is OI on that strike. So it also is a chance some folks are getting the heck out of Dodge, taking some profits while they can out there. But you know what? You folks at the end of the day are the ultimate arbiters of these things. So we'd asked you folks just a few minutes ago, just went live, D17 puts 70 cents, buyer or sold to you, and you once again cannot make up your mind in the early voting. You're pretty much exactly 50-50. You want to buy them or sold to you. I guess that's what makes a market. We'll come back a little bit later in the show, see how that poll is evolving. Number 2, 72,000 of the Jan double calls, and those are opening. So if you want to play a little bit of the old upside game and you got 31 cents burning a hole in your pocket, then Jan doubles might be your friend. 72,000 of those bad boys going up, followed by number 3, right back to the downside, 63,000 of the Jan 17 puts. So sounds like where we are now, the 17 put, maybe it's the new 18 put, dare I say it. Number 4, 45,000 of the Jan 22 calls. And number 5, 45K of the D16 puts. Yesterday, kind of the lone, shall we say, outlier on a decently active week otherwise. Just barely north of 500,000 contracts on the tape yesterday. So for whatever reason, couldn't get out of the gate yesterday. The hot option, such as it was, 36,000 of the D16 puts. Average price for those around 23 cents. We also did ask you folks about those yesterday during the option block. Are you down for those bad boys? They went up about 36,000 times. And 70% of you wanted to buy those for 23 cents. I get it. We are looking like we're in a pretty aggressive downside regime. But even that 16 strike, I should say, has been challenging in the past. But perhaps now is the time where we will hang out below there for a while. Number 2, about 30K of the D18 puts, our old pal. If you're wondering what those were going for yesterday, about $1.25. So you pretty much doubled your money if you bought those since the last time we talked about them. They were trading around 60, 65 cents when we were talking about not too long ago. So not a bad do, as the kids say. Number 3, 14,000 of the D17 puts, about 60 cents for those bad boys yesterday. Number 4, about 14,000 as well of the Jan 19 half put. So getting a little bit meatier, getting a little bit farther out in time. Those are trading for about $2.17. And the last one on our docket yesterday, back to the upside, this time in March, 13,000 of the March 22s. If you're wondering what those are going for you, $2.86. So once again, not giving you the upside for cheap. Wednesday, a little bit more paper on the tape, 663,000 contracts. The big dog on Wednesday was the March 20. So there has been some interesting March upside percolating in over the course of the past week. So if you've been listening to our shows and watching, our tweets and our flash polls, you've seen some of that come on your radar. So apparently it's March upside season, including Wednesday, 73,000 of the March 20s. That was all opening paper, by the way. Number 2, 51,000 of the D's 18 puts. Number 3, 47,000 of the Jan 17 puts. Number 4, about 40,000 as well of the D 16 puts. And number 5, 28,000 of the D 16 half puts. So a whole put palooza on Wednesday. Tuesday, also a banger, nearly a million contracts on the tape, 946,000 to be precise. Looks like a lot of that was driven by our old friend, whoever's been playing on this 47 half strike. They've been doing it for a while, well over a year. They've been lining up OI on just about every month, and they roll it extremely early because they were doing it again on Tuesday. Because, Tuesday, December 2nd, that's the day you want to roll your Feb 47 halves, right? That's when they did it. They rolled 100,000 Feb 47 halves all the way out to May. Again, this trade has been a fascinating one to watch. That sounds like a good case study for one of Russell's interns to go back and just track all of these 47 halves and also when they come to roll them, because that is a key part of the analysis. Number 3, 41,000 of the Jan 45s. Number 4, 36,000 of the D17 puts. And number 5, 31,000 of the Jan 17 puts. Obviously, that roll accounting for a good chunk of the volume on Tuesday. And then Monday, closing in on 700K. The big dog out there. Once again, March upside season. Are you ready for it? Listen, I'm not sure if I am, but some folks are. 52,000 of the March 85s. Yes, you heard that right. March 85s going up 52,000 times on Monday for 38 cents. If you're listening to the option block on Monday, we were chatting about those. Those were all opening. Once again, we put those out to you folks. Are you down for a little bit of March upside, or is this just nonsense to you? And surprisingly, over half of our audience, 55.6% of you folks, wanted to just straight buy those. You said, you know what, 85s, 38 cents, that's in my wheelhouse. 33% of you want to straight sell them. I get the impetus to want to sell them. I don't know if naked selling anything in the VIX upside, even 85s you can do all right with. I think you can get out of those eventually, but still, we know what happens to that upside in those strange moments. And then only 11.1%, I thought this would take it, but no. Only 11.1% of you wanted to buy them as part of a vertical, sell them as part of a vertical. So buy something lower and sell that, which seems to be the more reasonable approach. But who am I to advocate for reason in the land of VIX? We're not here to talk reason. We're here to talk vol madness. Mr. Meatball, sir, we will start with you. It's been an interesting, some might say a mad week, especially if you're looking at the lens of March upside. What's been catching your eye in the land of VIX options this week, sir?
I mean, it's definitely been active. It's nice to see more puts on the board today. As you said, lots of Jan trading today. But we also have a lot of, Jan upside trading. You got a big order of the 22 calls, about 40,000 of those bought today. The Jan 55 calls have gone up for some size, so you've got plenty of action there. And then, again, Jan and December 17 puts. So, they're kind of strangling the VIX, buying downside and also buying upside. So, I think, I don't think traders are fully certain of what they should be trying to accomplish with some of their volatility positions, but their expectations are that you're going to get some decent movement, either maybe that final death knell to VIX, pushing it to, into the 14s or 13s, or we're going to get another trip back to the 30s. That's the way stuff is pricing and the way stuff is trading.
Back to the Future, to the Upside. I may have just watched those movies again. Those are good ones.
They are good movies.
I haven't seen 2 and 3 in a long time, and those were fun out there. Mr. Rhoads, on the last show, you hypothesized that some of these quote unquote nonsense VIX upside prints might actually be the new form of the stress test out there that we're seeing. Do you think these March 85s fall into that category for you, sir?
I think that would fall into that category. And honestly, what I think's funny about it is I have a funny feeling that the people that are using VIX that way are looking at spot VIX and seeing what spot VIX might do, and then making an assumption that spot VIX is the underlying with those out of the money calls, and that's actually going to, and they may be using them wrong when they run the stress tests. I have a neighbor who used to be in charge of the stress tests, who's now at a bank. I'm gonna go bother him about this. His son's in my fraternity, and through the throwing things away, etc., I found a whole bunch of Sigma Chi stuff for his kid, and his kid lost his mind. So I'm gonna go. They owe me big time.
So hopefully someone
I'm gonna ask him if he sees VIX, if he sees VIX when he has to do that. Have banks used VIX before, and do they understand what they're doing?
Hopefully someone who's in charge of the stress test knows they're not looking at the cash, right? Hopefully that's a base level of expectation we could have going in. I know from experience I probably shouldn't have that expectation, but I can hope, right?
You don't want to have that expectation.
Yes.
I know. Regulators are awesome. They provide a major function that is needed within the markets. But I would be called in when I was at Cboe. All of the instructors periodically would be called in to look at statements when they thought people might be trading on inside information. So the complex trades would start to get them. So, and these are people that don't trade every day. And when you don't trade every day, you got to pause at everything you look at.
We do have shall we say, a surplus of lawyers on the regulatory side as opposed to practitioners, but that is a conversation for another day. Let's practice some vol ETPs, shall we, listeners? Let's go out to inverse vol land. It's been a good ride if you've been riding that inverse vol train. You know, the last time we gathered here together, it was looking a little bit dicier. I think we were hanging out somewhere in a 17 handle. Things were not looking that great, but if you stuck the course, you stuck the landing, you're north of a 21 handle right now in SVIX, 21.15, up about over 3.5 points, about 3.65 points from where we were on the show 2 weeks ago. So again, SVIX finally making up some lost ground. You know, the last time we were up here, I think we were all collectively saying here on the show, last time SVIX was up around 21, that it was heavy overwriting time. I have been pretty aggressive. I have made some changes to my SVIX, which I will talk about coming up a little bit later on the options oddities, but an interesting time in SVIX land. Mr. Meatball, I know in the past you've been pretty supportive of when you get up to this level, get the heck out of Dodge, or at the very least hit the bid on some calls. Are you still overwriting your SVIX, or you think maybe we're going to get a little bit more squeeze heading into the Fed? What are you up to in SVIX land right now?
I am overwriting. That is what you should be doing here. Overwriting and collaring. But, you know, I think Wednesday's going to be a day to get through. When we get through Wednesday, I'll be interested to see kind of how those suckers move. But, you know, we had the reverse split in UVXY since we were here. I want to talk about here in a second. But so that's really been more of my focus than SVIX itself. But SVIX is dead in the you better be selling covered calls zone right now.
Mr. Rhoads, do you concur with that? I know last time we chatted, you had dialed back a lot of your SVIX. Are you out completely, or are you in that zone of override aggressively, sir?
I overwrote so aggressively that I don't own it anymore. I really all I've got right now, all I've got are way out of the money puts that expire on the last day of the year, and I don't really expect them to pay off. So I just want to kick this year to the curb. You know, I feel like I got divorced twice, and yeah, it was not a fun year for me at all.
But you sold 2 houses. That's good.
Yeah, I did an asset swap at a credit.
There you go. So you got
that. Saying that to confuse people.
You got that going for you, which is nice.
Can't beat that.
No, we all have about once a decade. I have a very difficult year. The last time was actually 2007. So just happy to have it over.
Your difficult years correspond with difficult years in the market for the most part. So
yeah, for the most part.
Interesting how that shapes up. Let's see how UVIX is shaping up right now. By the way, SVIX, even with this big move, can't really muster a lot of volume. The ADV is nearly 6,000 contracts a day, so that's good to see, up about 600. But today, only about less than half of that. So once again, even with these loftier levels, The options can't really get out of bed. UVIX getting out of bed to the downside, 7 3/4, down 4 points, pretty much exactly from where it was last week, putting up 41,000 contracts. So UVIX not having a problem lighten up the volume tape. The ADV is 49,000, probably going to hit that by the end of the show, whereas SVIX is struggling. And then the Meatballs' beloved UVXY, as we talked about a few weeks ago on the show, has had a pretty big reverse split, got up to north of the 60 handle the last time we were talking. Coming back to earth a wee bit now, as these products are wont to do, down whopping 15 handles since our last show. So that's over a little point today to the downside since the last time we talked about it, listeners. A little bit shy of a 45, 44.85, down a little over 15, about 15.15 points from where it was this time last week. This is another one. We see this quite a bit post reverse split, where sometimes you get these, vestigial options positions and everything else, and it kind of gums up the options works for a little bit. So we don't see a ton of volume in the days and weeks coming out of the reverse split, and that's kind of what we're seeing right now in UVXY. The ADV is 87,000, which sounds good, but that's down 31,000 from our last show. And today, only 23,000 contracts on the tape. So this is the other side of the reverse split, is the volume kind of dries up for a little bit, but hopefully it'll come back to life. Mr. Meatball, I know in the past you've taken a dim view of the neutered UVXY, but it sounds like UVXY north of a 60 handle kind of got you excited, sir.
Yeah, it does. It's a good time to be, with that reverse split, and with, vol being still, at the time, still 18, 19, but us having entered contango, that was an excellent time to pick up some puts in UVXY and ride them for a bit. And as UVXY has certainly, come off the top, it's now below $45 after the reverse split. The split had it, back above 50, and then up to, almost got to $70. It's already lost, $35, or $25. But there could, if we do get a real kind of push lower in VIX, this thing could be into the 30s in very short order. And I would add, options are the cheapest they've been in this thing in quite some time. So I kind of like that as a trade as a whole.
I do like hearing that, because I was just pulling them up myself. And that's been one of the issues in the past, is that we'll talk about this, then our folks will go look at it and like, oh my God, they want what for a put? Now, their market makers are not dumb. They know how this thing works, and they price it all in. So good to hear things are a little bit cheaper. We'll have to start taking some looks out here. It's been a little while since we've slung in UVIX, but hey, all it takes, listeners, is a nice reverse split. So get at it, UVIX, and maybe that'll get you out of your little doldrums here. VXX also coming back to earth after some loftier levels on our last show. It's at about a 30 3/4 right now. So that puts it down a little over 6, about 6 1/3 points from where it was this time last week. Putting up some volume out there today as well, about 32,000. The ADV is 44,000, it's up about 3,000 from this time last week. I know, Mark, in the past, you've been dipping your toes a little bit in VXX. Decent move out here, but obviously not a UVXY. Has UVXY taken up all your downside interest, or are you playing a little VXX still?
That would be my second choice to UVXY, but they both look, 6 of one, half dozen the other, depending on how you want to structure it. This is another one where the options I've gotten, if options are cheap in UVXY, they better be cheap in VXX and in VIX itself. So yeah, options are cheap. You can pick your poison, folks. Although except for UVIX, which is not a good one right
except
now.
for UVIX right now, yes. And you know what, listeners, if you want to pick some poison, doesn't get more poisonous than the crystal ball. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we attempt to wrestle with the vol gods, see what they have on the docket for the coming week. As we're coming into the end of the show, listeners, the great annihilation of vol continues. Major indices are up a little stronger now. S&P up 1/3 of a point. S&P, NASDAQ, and Dow pretty much all up 1/3 of a point. Dow up a little more, almost 0.4 of a point. And VIX Cash hitting a 15.5 level, listeners. So I think the technical term is wow. That's a lot of downside. They are squeezing out of the juice last week, or I should say 2 weeks ago on the show. So it's already hard enough to guess for 1 week, listeners. Mr. Rhoads and I last week bravely, some might say foolishly, attempted to predict for 2 weeks out. I was at 24 1/3 last week, and then coming down to 21 3/4 for this week. Obviously not low enough here. Let's see, where did we go out this check? So yeah, I was a little high on both. obviously a lot high today. Mr. Rhoads, aka Gretchen, couldn't be bothered to do 2 predictions. He just did 1 and spread it over 2 weeks. That was 23.45. Clearly he was about almost exactly 8 points off, as we're at about a 15.47 right now. So no joy for any of us here on the show today. That means, Mr. Meatball, you get the pride of going first, sir. You have a lot of opportunities for palindromic nonsense to the downside.
I know.
I'm kind of scared what you're going to say.
I'm gonna go easy here. We're gonna go 14.41.
Oh, I thought we were getting like a 12.21.
41. I think post Fed, obviously if Powell decides to close cold water, I'm gonna be very wrong. But if he decides to play ball, we could definitely see things pretty relaxed by next Friday, especially as we head into the holiday season. They're going to start trying to price stuff out.
Mr. Rhoads, I guess technically you were closer, so you get to go next, sir. What are you feeling, sir?
We ever had anybody come in, that not last, that's been off by 8 points?
Actually, no, I was closer, but I'll let you go first anyway. Why not?
Oh, I appreciate it. 1570.
1570 says the one, the only Gretchen. All right, that puts it down to me. I can't look in our chat. I don't want to be led astray by our chatters. And you know what? Yeah, next week, post-Fed. That is the question. Where will we be? And, a little bit of gentle drift to the downside doesn't sound like the craziest thing to me. I'm going to say 15.25, so exactly 1/4 of a point below where we are in the cash right now. So that's your market for next week, 14.41 to the downside to the meatball, 15.25 for me, a rare middle appearance, and then 15.70 to the upside for Mr. Rhoads. All right, that is going to do it for your vol journey for this week. Thanks for joining us. If you missed anything, remember, make sure you subscribe to the full network wherever you get your favorite podcast. That way you can catch up on everything, not just from this week, but from the past, coming up on 19 years, which is wild to say out loud. And Mr. Meatball, sir, folks want to catch up on all of your newsletters and various other sundries. Where should they go? What should they do?
Yeah, come check us out at optionpit.com, or find me on YouTube and follow me on Twitter at OptionPit.
At OptionPit, and you too can be flashed by Andrew in a variety of dark alleys, and you can choose your frequency, 5, 7, or 9 flashes, and then you all can have a good holiday season over there. OptionPit.com to learn more. Mr. Rhoads, how much do folks have to pay you to flash them in a dark alley, sir?
Oh no, I pay people.
You say I will pay you to flash them.
I'm like Microsoft and Meta. I'm spending all the money. I'm not getting paid like Nvidia. I'm the Microsoft of the dark alley. If you want to find me, Twitter is probably the best place. Dr. Larissa Endemiak and I are going to launch something in early January that I'll talk about a bit more on here, but that's that for that. And nobody ever really has to pay me anything, ever. I just do stuff at this point in my life.
Ever. I like that. Can you come? If I had a lawn, could you come mow it for free?
I probably would. Just to get out of the house sometime. So
there we go. So if you need some household chores done, Mr. Dr. VIX is your guy, as long as you're in the Chi-Town / Indiana zone. Then you too can get some stuff done for free. That is going to do it for us on Vol Views this week. Stay tuned if you're hanging out in the Pro. We'll be back right in your ear holes after the show for the official after party of Vol Views. I'll talk about what I'm doing in SVIX and some other fun stuff. Coming up on that, we'll talk about a whole bunch of weird, wild trades. It's a good time. Check it out, theoptionsinsider.com/pro. Then we're back again on Monday with the option block all the way through to next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.